Allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today is September 5th. It's almost 1 o'clock Chicago time, and it's another hour session of CFRN Thursday. It's what I do is for 1 hour, I'll break down the CFRN trade setup and do it in slow motion. Okay, so first thing we'll do, game plan is, number one, I'll go over the disclaimers that I have to broadcast before I start any type of presentation. Number two, we'll go over the setup. I'll break down the typical slingshot trade setup that you'll see in the training room every single morning. And then what we'll do is we'll hop into a live environment, and what I'll do is we'll look for this same setup, and then we'll just apply it in a live market. So we'll look for that setup. We'll go inside the DOM. The DOM is this tower here, and this is where we do our buying in the green side, and this is where we do our selling on the sell side in the red. Okay, so what you'll end up seeing me do is, if all the rules apply, I'll show you where to enter, when to put the stop, when to exit, how to manage the trade, all from start to finish. Okay, and what I'm doing is I'm duplicating what you'll see in the training room. The big difference is in the training room, it's in fourth gear. All right, Michael sometimes is doing it fast. He's in there. He's in there for 2 hours. His goal is to get the target for the day, and then answer questions. What I do is I break it down, and we'll do it in slow motion. Okay, so you fully understand what you're going, what you're viewing when you're in there. So if you're brand spanking new and you're on the trial, this is going to be a great place for you to start, because this is your cheat sheet or your syllabus. Okay, because my goal is to give you more of an eyes wide open approach. Okay, so at the end of your trial, when you get an offering from CFRN, you know, you're well equipped to make a decision on whether or not you want to hit the PayPal button or not. Okay, and in the bottom line is, if the additional incentive obviously is if you decide to go down the CFRN path, that you elect to do, you do that business through DtPro, which is the platform that you're seeing. Okay, these are the CFRN indicator set inside the DtPro platform. That's what you're staring at right now. Okay, so that's the game plan for this afternoon. So I usually open up the room early so I can knock out the disclaimers, so we can spend more time looking at the markets. Throughout the presentation, I'm going to make some observations on some traps that people fall into. Okay, I'm in the room every single morning. I've been in there for 8 years, probably longer, and I've really, over those years, I've seen enough screenshots and screen shares and emails, and I see some of the same things that traps that people kind of fall into. Some of the obvious ones, but some of the other ones are some I'll point out this afternoon. The obvious ones are like not moving stops, over trading, doing too many contracts. Those are the common things that people fall into. And that just goes in trading in general. When it's relevant to the CFRN method, then there's some things that I'll pick up. I'm going to hammer those things away, so we'll talk about that. Okay, and I'll sound like a broken record over and over, but I think if you hang out in here and you hear me hammer these same points over and over and over again, when you're faced with these objects, when they're hitting you in the face, maybe a light bulb goes off and says, you know what, that's what Bert was talking about. Maybe I don't hit the button this time. Okay, and you might avoid a stop out. Maybe that's the difference between being negative or positive. I don't know. But the point is to point those out because I've seen them. So that's a scoop on that. All right. All right. So again, before I start a presentation, I have to go over the disclaimers. Again, doing this for almost 25 years, I really have seen the good, the bad, and the ugly when it comes to trading. So I'm not a guy that likes to throw the disclaimer up there, tell you to take a look, and then throw it under the blanket and hope you're squared away. I'll take a few minutes to talk about it because, again, this is a eyes wide open approach to the CFRN method. But this is also, guys that are brand new, this disclaimer applies to you. All right. So this is an eyes wide open approach to trading in general in the future space. All right. Because what this disclaimer really outlines is a few things. Number one, this is a leverage market. So basically, you can lose everything and some in your trading account. All right. So if you're not using stop losses, if you don't have a trading plan, if you're not engaged in the marketplace, if you're not looking over your trading account, if you're you turn your back to some of the news items, this disclaimer will hit you right in the face. Okay. The good thing is if you do go down the CFRN path, we are going to talk about a trading plan, right? It's rules based. That's what we're going to cover here in the next few minutes. You are going to use a stop loss, right? Every trade has an 8-tick stop attached to it. You're going to be on a 4-tick range chart, right? So you're looking at the market under a microscope. So you're going to have to be engaged in the marketplace. You're going to have to be in tune in what's going on, okay? One of the rule sets for CFRN is that they do not trade around news reports. So you are going to know, or that'll be part of your morning routine to find out when the reports come out. Okay, so all those things that can create, a blow up in your trading account. CFRN is going to hammer some of those basic things right off the bat. Okay. So does it water it down a little bit? Yeah, if you follow the rules and do all the things that I told you to. But in the end, it doesn't totally eliminate it. So what that means is, if you are trading, you are doing all the things that I just said. Place a stop in front of the screens. Engage in the marketplace. You have a trading plan. You do all those things, but if something silly does come out, all right, there is a chance that stop will not get elected, and there is a chance that you'll still be in the market, and there is a chance that you'll still have unlimited risk. All right, that is the worst case scenario. Okay. The plus side of that is that you will be in front of the tower, and you will be in front of this order entry screen. If all hell breaks loose, all you have to do is hit this exit at market and cancel hotkey. That'll get you out of the market. You can take a deep breath and say, what the heck just happened? And then your next course of action should be to call me at the trade desk and say, hey, am I flat? Do I have any orders working? And then calm down a little bit. Okay. So I know that's not a rosy way to start a webinar, but those are the things. That's real live stuff. That's stuff that can happen, and if you're new, you should be in tune to that. Okay. A lot of times we get bombarded with emails and advertisements of how you can do great in the market, in the futures market, but then don't necessarily talk about the risks that are involved. There is risk. Okay. All right. Get off that soapbox. The other thing, the funds that you're putting in the trading account should be risk capital. It should be funds that you can afford to lose. I understand. No, nobody likes to lose, but in the event something does happen, if you do lose those funds in your trading account, it shouldn't change your lifestyle. Okay. So that's the other thing that the disclaimer also outlines. And the last piece of information is past performance is not necessarily indicative of future results. All right. That's a one-liner that they like to see on every disclaimer, so it's been added. I even highlighted it, and that's why we talked about it. All right, next one, and this is our last one. So don't hang up yet. My relationship with CFRN, in a nutshell. Bert is from Daniel's Trading. Okay, Bert doesn't work for CFRN. Dwayne and Michael and Valerie, it's their indicators. It's they're a third party application. Okay, it's their software, their trading tools, their education, their videos on their website. They don't work for Daniel's Trading. All right, there is a line in between us. Okay, that's what has to be disclosed. All right, the roles are pretty much like this. This is the DtPro platform. This is the platform that I support. What you're seeing now is an indicator set inside DtPro. Literally, with probably 4 or 5 clicks of a button, the indicators can be added to the platform right away. Okay, he even created an install video on how to do it. Okay, so it's pretty easy. All right, and not only that, if you run into any obstacles, or you can't get it downloaded, or you can't get the indicators imported, or whatever the deal is, the good thing is you can call the trade desk. You're going to end up calling me, and we can do a screen share. I can walk you through any obstacles. The good thing is, and the bottom line is, you'll be able to talk to a live body. Okay, it's not like Ninja, where it's do it yourself and you exchange emails with somebody. You can actually talk to somebody to walk you through it. Okay, and that's a big deal. All right, and like I said, I'm in the room every morning, so I know the trade setups, I know the trading platform, and if you have any questions with any of that stuff, you can call somebody. And guess what? I'm the guy that's picking up the phone. So that's comforting for some. All right, not for everyone, but it is. Okay, especially if you're going to spend some money on education, you'd like to know that the guy that you're talking to knows what the heck's going on. Okay, and in the end, if you decide to use a DtPro platform, I handle the brokerage, the execution, and we could talk about that path to take. Okay, so that's what this is about. Ultimately, if you go down the CFRN path, any money that exchanges is between you and CFRN. Anything on their website, their videos, the workshops, that's between you and them. The Logic 247, okay, this product here, or concierge trade alerts, or the swing trade, all that stuff. If you need to get signed up and activated for that, you would reach directly out to them. Okay. Everyone gets busy. Dwayne in the afternoon is usually on the radio program. Michael's running around planes, trains, and automobiles sometimes. So a lot of guys will call and call me, and I do have a hotline to them. So if you feel like, hey, no one's calling you back, what have you, it's fair game. Call me, and I'll get a hold of Dwayne, Michael, or even Valerie, and someone will pick up the phone and get in contact with you. So don't think you're on the sidelines. Okay, well, someone will contact you. So that's it. That's the relationship between CFRN and myself. And short story is, Dwayne and I hooked up, probably got together about 10 years ago, and it was just a radio program at the time. And he invited me on the radio program and said, look, I have traders that are in the room. They're always asking questions about the markets and forecasts, and general questions about trading and about contract specs, everything that people want to ask. So I popped in there, and it was just radio, and we were just talking about markets and trading in general. And what I noticed over the years was a lot of people in the messenger bots was asking them, teach us how to trade, teach us this, teach us that. And he got together with Michael. Both of them are TradeStation developers, and just so happens the platform reads easy language, and they coded all the indicators inside DtPro. So the platform is free. That's a nice bonus. People don't have to pay extra for the platform, and I guess the timing was just about right. So just happened to work out that way. So that is the story. So let me send this invite to Mark because he's having a hard time getting in. All right, so I sent that to Mark. And all right, so that wraps up the disclaimer part of it. All right, again, not a great way to start the webinar, but it's you know, it's the truth about trading, and it starts with the risk associated with it. So, you know, why not talk about it? So, all right, this is live. The markets are moving. My phones might ring. If they do, I'm going to have to put you on hold and maybe take a few phone calls. But I just want you guys to know ahead of time that's happening, so you don't feel like that I left you at the bus stop. Things are happening today, so especially after last night. So we are going to talk about the trade setup. So if you're brand new, here's your syllabus. And the first order of business is getting you on the correct time frame. CFRN inside the training room is on a 4-tick range chart. Okay, and so if you have DtPro up, the question is, how the heck do you get there? And chances are you're on a time-based chart. You know, if you're following logic, you might be on a 30-minute chart. You might be on a 5-minute chart, right? Because Dwayne often talks about those two time frames. The way you get to the 4-tick range chart is the upper left-hand corner next to the time frame that you're on, 5 minutes. Hit that drop-down box and then go down to custom. Make that and select range bar. Excuse me. There's a box that opens up. Select range bar and make that one look like a 4. Okay. If you hit OK, you'll be on a 4-tick range chart. The parentheses and R here is the tip off. And if you're staring at the ES right now, that's what we're looking at now. It's an ES S&P E-mini on a 4-tick range. Okay. The advantage of the 4-tick range chart is that we know that the height of each candle is always going to be 4 ticks in height. So inside the training room, Michael can be predictive or place orders in advance if all the rules apply. Okay, if all 3 or 4 rules are in play, okay, then Michael can be predictive because the range bars. He already knows what the highs and the lows are going to be as the candles are printing, like we're seeing here. Okay, so what he's going to do and what you're going to hear, you're going to hear him call out some of the highs and the lows of then the current bar. What he's doing, he's preparing himself, he's preparing to place an order. Either he's going to get along above the current market price, or he's going to get short below the current market price. And that current market price right now is right here, and it's moving. So if the market takes off, boom, he's going to be entered in on a stop, and he's going to go with the momentum of the market. If the market breaks down, he's going to get in on the short side on some weakness. All right, so if the market completely falls apart, he'll be able to take advantage of it by placing a buy stop if he's getting long, or a sell stop. Okay, normally stops are associated with stop losses, but you can actually enter the market on a stop, and that's what he's doing. Okay, you will hear that, so prepare yourself. So if there'll be a time where the market will just break down or it'll take off, and then you're going to wonder how the heck he got in there, and there must be some parlor trick going on. It's not. He's buying it on a stop, or he's getting short on a stop. Okay, so just forewarning. Today, I'm gonna, if that pops up, I'll show you how to do it. But I'm gonna keep it simple. If the rules apply, then what we're gonna end up doing is we'll just go inside the DOM and left click. All right, we'll try it again at the last price. Okay, we'll keep it real simple. Okay. The first trap that people fall into is they usually get down to the custom box. They get that far, the box opens up and they hit tick bar instead of the range bar. They hit this one right here. They make that 2 look like a 4, and they're staring at a chart that looks like this. It's that same chart, the S&P mini. Okay, if you're staring at something like this, it is wrong. Okay, again, 4 tick range. This here, again, is the tip off, parentheses and R. All right, so we got you on the time frame. Okay, that's the same time frame that Michael's using inside the training room. So the next order of business is to talk about price action, top portion of the chart. Okay, so a few buzzwords here. Number one, this red and blue line is referred to as the MA1. Okay, nothing fancy about it, it's just MA1. The green line is referred to as the BBC. That is short for bullish and bearish cross. Okay, together they make up step number 1, which is this. When the MA1 crosses the BBC and the MA1 is red, like you're seeing here, that is a bearish cross. If the MA1 is blue and crossing the BBC, that is a bullish cross. So the guy that's highlighted here is a bearish cross, and the reason is the MA1 is red. Okay, step 1 gets the ball rolling. Okay, once you get the cross, okay, now you're on alert status. Okay, so step 1 is the bullish or bearish cross, and again, the one that's highlighted is a bearish cross. Okay, now after the cross, the normal thing for the market to do is to gravitate toward that green line or the BBC. That's what we're anticipating. That's what we're looking for. We're looking for the normal thing, is to get back to the green line. So not only are we looking for it to make an attempt at it, we're actually looking for it to touch it, but then close in the direction of the trend. All right. So I identified the trend as being bearish because the MA1 is red and crossing the BBC. Therefore, we're looking for a down close or a red candle. Okay, if the roles were reversed and we were looking for, if we had a bullish cross, then we'd be looking for the same thing, a pullback to the green line, but then a bullish close or a green candle or a blue candle. Okay, we'll see that if we're trading the S&P today, and that keeps going higher. Okay, so that is step number 2. Okay, the attempt at getting to the BBC, which is the green line. We're looking for a touch and then a close in the direction of the trend. Okay, so that lights the match on step number 2. Now, a few things. Few things to note right off the bat. Notice I didn't say get short, get long, get short when we have the crosses. Okay. Again, after step 1, okay, we are looking for that normal thing, that pullback to the BBC. So the next question I usually get is, well, why don't you just place an order right here at the BBC and get short? Okay. And the reason is sometimes the market just blasts through. Okay, so what we're doing at this point in the game is we're sacrificing price for action. Okay, so we're saying, hey, if the market does the normal thing and closes in the direction of the trend, maybe this little extra variable is that little piece of the puzzle that says, hey, maybe step number 2 is in play, action, after all. Okay, so we're sacrificing price for action. Okay, and the third thing is that, and you're going to hear me labor over this afternoon, is after this cross here, what we're going to do, and what CFRN members are trained to do, is they're going to activate their trend line, because in some cases, okay, the market has so much bearish and bullish momentum, it's not going to get to the BBC like it does here. Okay, it'll make an attempt and then fall apart. Okay, so what we'll do is after the cross, we're going to activate the trend line, which will be over here. We'll activate the trend line and we'll draw trend lines, because in the event that it doesn't do the normal thing and it does break the trend line like it does here, then we're in a position to take action if all the rules apply down below. Okay, so we will talk about that. You will see me do that, and it's a good habit for you to get into, especially if you're already a CFRN member and you're not doing it. Because if you don't, number one, after the fact, you'll be fumbling around with a trend line, so you'll be late to the party if something does happen. But number two, if you get in the habit of doing that, and if it does, man, you're already in a position to get over into that DOM and push a button. All right, so you're training your eyes and your hands to do what you're supposed to. Okay, so that's a good habit to get into, and you'll see Michael do it. Okay, you'll see a bunch of trend lines on his chart, and if he's doing it, then you should do it. So, so that is, step 1 is in play, which is the cross, and step 2 is the normal thing, which is pull back to the BBC, put them to close in the direction of the trend. All right, so then our eyes gravitate toward the oscillator portion of the chart, or the slingshot. Okay, so some buzzwords here. This red and blue line is referred to as the cycle, and the green line, no fancy words for it, it's just called the green line. Okay, but the space that's created here in between the two is referred to as the divergence, or the separation that Michael is talking about in the training room. And the trade exists down here. All right, I'm going to tell you why. Okay, it all starts and finishes here. Because here's what this is telling you. Okay, here's the breakdown of the slingshot. The cycle is red. We already said red is bearish up here. We also said a red candle is bearish up here, right? So a red cycle would be good for the home team, because when everything is the same color, that stacks all the probabilities in our favor, just so you know ahead of time. Okay? So what this is saying is, look, the market is bearish. The momentum is bearish right now. All right? Because the cycle is red, and it's got a nice slope to it too. It has a 45-degree angle pointing down, so you should get excited about that. Okay, now this green line is pulling away from the cycle. Okay, with the green line pulling away together with this price movement here, which is normal, right? We expect this to happen. What this is suggesting is that this is just a pullback in this ongoing downtrend. That's what it's suggesting. Okay? And when this is happening, step number 2, together with step number 3, which is this pull away, it's like a slingshot, right? That's why it was labeled that. It's pulling the rubber band back from the stick, all right, or from the slingshot, all right? What it's saying is, look, this is just a pullback in this ongoing downtrend, because the cycle is pointing down. So we should get short, okay? Because after that match has been lit, what we expect to happen is this: ultimately this green line is going to come down and get into the cycle. They're going to touch, all right? And it's at this point in the market journey here, the market will make a new pivot low. Okay, and it's at this point, okay, where the green line's getting into the cycle and price action stops here. This is where we get out of the trade. All right, so this is why the trade exists down in the slingshot, because what happens next, green line should do the normal thing, pull away. They get into the cycle, then pull away, then get into the cycle. Then at some point, the momentum is going to turn bullish. This line turns blue on us. Okay, and this line should be then, highlight the pen here, this green line should be building separation or divergence underneath it, pulling away, getting into the cycle, pulling away, getting into the cycle. So in the end, what you end up doing is selling this top, selling this top, selling this top, buying this dip, buying this dip. And along the way, you take the profit here, take the profit here, take the profit here, and you get the picture. Okay? That's it. That's why it exists down here below. Okay? That's the game plan. And along the way, every trade has an 8-tick stop attached to it. So if you're brand new here today, and you're trading maybe the gold and the crude, because you're going to see Michael do that, you're risking $80 a contract if you're dead wrong. If you're trading the soybeans or the S&P mini, that's closer to $100. If you're trading the YM or maybe the euro currencies, that's closer to $40. All right. Along the way, once you get into a trade, okay, this would be our entry. You're going to learn to move your stop, move your stop, move your stop, move your stop. Okay, and I'll go over that. Okay, if we find a trade setup. Okay, so you are going to be using aggressive risk management. Okay, so in the end, first day of class, what are you signing up for? Okay, well, you're not going to learn pick the top here and pick the bottom here and trade it from point A to point C. That's not what you're going to learn to do. Okay, what you're going to learn to do is take a piece out of the middle. Okay, and you're going to learn to trade it from this point to this point here using aggressive risk management along the way. Okay, so you're going to be scalping. Okay, you're going to be looking at the market under a microscope. You are going to be using aggressive risk management. That means you might have a lot of stop outs. That means you might have a lot of trades. You're scalping. You're going to have to be glued in front of the screens. You will have to be very good at using this thing, the tower or the dom. Okay, you're going to have to practice using this guy. Okay, so that's what you're signing up for. All right. In the end, you know, people gravitate toward those that they feel comfortable with. That's why they offer the trial. The good thing about the trial is you'll be able to download the platform, download the indicators, put trades on, take them off, follow along with Michael, ask questions. You'll be able to take a mentoring session with one of the guys. So they pretty much do a thorough job of giving you everything, putting it on the table, allowing you to, you know, really test drive everything before you decide whether or not you want to take the plunge or not. So it's just up to you guys. Okay. So that's it. That's the setup right there. So what I went over here is what we'll look for in the market. So I'm going to shut this down, my platform, and go into demo mode. Okay. Now, the one thing I didn't cover, and this is the first thing that should be on the top of your page if you're taking notes, is this. Before we push any buttons, before these rules apply, the markets better be trending. So if we're in a bear market, we get a bearish cross, The market should be doing one of these. Okay. If we get a bullish cross, the market better be doing one of these. They better be going up. They better be trending. So the first thing you put on that piece of paper is, Bert says the market should be trending before we push any buttons. Okay. And I want you to add another line item to that. If you're using DtPro, I want you to get in the habit of hitting this zoom out button, this magnifying glass. It's red. Click it a few times. Okay. We're staring at the S&P 500 on a 4-tick range chart. I'm staring at a market that is not trending and trading sideways right now. Okay. Sometimes we get hypnotized by we'll be looking at Michael's chart, and they're blowing up pretty good. Okay. This is the first trap that people fall into. They get caught in a market that's trading sideways, and they don't understand why they're getting stopped out. If you took a few minutes, just go 1, 2, 3, you might look at the bigger picture, okay? And you might find yourself, man, we're just caught sideways here, okay? And if you're not sure, look at the dynamic support and resistance dots. Look at how side by side they are, okay? That's your first clue, all right? If you're staring at something like this and you're not sure, okay, stare at these. If they're going down the track like a pair of choo-choo, like choo-choo tracks here, man, this is it. We're sideways at best. So you don't push any buttons, right? That is usually the first trap that people fall into, okay? And that's because they're not looking at the larger landscape of the market. You actually should be looking left, all right? And you don't have to change time frames. You don't have to go an hourly, daily. No, just hit the zoom out button, please, okay? That might avoid a stop out, okay? So start there, okay? Is the market trending? And hit the zoom out button, okay? And if you're unsure, don't hit any buttons at all, okay? Make sure it looks easy and obvious, okay? All right. So we check let's go to a different market and we'll hang out at crude oil, okay? Here's another market that's trading sideways, right? Look at dynamic support and resistance dots, side by side. Yes, we were trending, okay? We were going down, and then all of a sudden we went into consolidation mode. So there are crude junkies, and Michael does very well in crude because it moves. Before we do anything, we want to make sure we break this bottom here, or we break this top here. I'm not just saying poke its head above it. I want to see some action down below or above, okay? Let's make sure it's easy and obvious, okay? See how we just kind of poked our head above this prior high? That's no good, okay? That's sideways action. And then all of a sudden dynamic resistance starts printing up, okay? So let's spend some time above there, okay? I'm going to switch guns on you again because that's just kind of laboring. Go to natural gas. Again, for the moment, if I zoom out here, okay, we're kind of caught sideways here, okay? Just a few highlights here. We do have a bullish cross here, right? The MA1 is blue, so we're thinking buy, 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 right? The normal thing for the market to do is to pull back to the BBC. Okay, we look for a touch and a close in the direction of the trend. Okay, as I said earlier, as soon as we get that cross, we activate the trend line and we start drawing. Okay, and the reason why we do that, I'm going to blow it up, is we don't know if it'll get back here or not, right? It might have so much bullish momentum and won't get back here. Okay, however, it does, and we get an up close. Okay, the candle is blue, the MA1 is blue, even the MA1 is blue. You should get excited, right? The cycle is blue. Not only that, it's on a 45-degree angle, and we have that separation. So right here, okay, it's a bullish setup. Okay, that is your bullish setup. Now your question will be is, well, wait a minute, what about this crazy dynamic resistance that's printing above you? What's up with that? And what about that trend you were just talking about? Absolutely. So if I were staring at that an hour ago and I saw this, I would be staring at the red resistance dots. I would be staring at this resistance point to my left, and I would be saying, no, I'll pass on this one. And as a result, the bottom line was it was just a break-even trade in the end. Okay? So, all right, so there's my phone. Stand by. How do I hit music here? Button. All right, so maybe he'll call back. All right, so again, okay, that's just breaking down the natural gas in that time frame. And I hate going backwards, but you know, there's something to talk about there. All right, I went back to crude oil just to check up on it. And again, it's still sideways, so don't get excited about it. Okay, I'll check the ES. Again, more sideways action. Okay, notice my first instinct, boom, 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 hit that zoom out button. Okay, a big question I always get is how many times should you push the button? 3 or 4 times. Okay, you don't really have to dial it down too tight. If you really have to do this, then that tells me you don't know if it's trending or not, and you should not push any buttons. Okay, it should just be a few clicks of the button. It'll be easy and obvious. Okay, let's go over the gold because gold is rocking and rolling today. Okay, so some of that more action, we were trading sideways here, right? A lot of that we just saw in the crude oil and the ES, right? Finally breaks out, right? Normal thing for the market to do after the cross is pull back to the BBC. Okay, in the process, we draw the trend line. Okay, we finally get down here. Okay, and I'm going to adjust it for that guy. Finally, we get down here, right? We get that up close, but something's changed. The cycle has, right? What happens when we see this? As I said earlier, when everything's the same color, that's the green light to go. Okay, when everything's the same color, because that stacks up the probability in our favor, right? But what if it isn't? What if that cycle turns red on us? 2 things. Okay, number one of the reasons why we draw a trend line is we don't know if it'll get to the BBC, right? It's got so much momentum it can't get there, so we got to get in the habit of drawing a trend line. The other reason why we do it is because at some point this cycle might turn color on us. Okay, it does. If the cycle turns red, an alarm goes off and says, look, this is watering down the probabilities a little bit, so buyer beware. But also it says, look, if you're going to take this trade, we better close above this trend line before you think about getting long. A close above the trend line is required. Okay? So those are the things you have to think about. And then I'm going to throw you another curveball. If this is turning against you, but it's also turning at a 45-degree angle against you, okay, that's a disqualifier. In other words, you're not going to push any buttons, okay? So, again, to rewind the button here, when everything's the same color, that's great for the home team, okay? If it turns color against you, a trend line is required, and a close above the trend line is also required. But if that cycle is red or a different color and it's going against you at a 45-degree angle, that is a disqualifier. Okay, that means we don't push any buttons. Okay, so we talked about 2 things. Number 1, if the market is not trending, we don't push any buttons. So that's disqualifier number 1. Disqualifier number 2 is this guy here. If the cycle is a different color and in the wrong direction, we don't push the button. This is trap number 1. This is trap number 2. Okay. People have a tendency to forget that point. Okay. Because it's fair game. You know, if as long as the cycle is flat, all right, and it's red, that's fine. Okay, you're going to see Michael take plenty of those in the training room. But if she starts tilting over, especially at a 45-degree angle, you're going to find out more times than not the market will do this and actually go against you. Because what it's doing is saying, hey, the momentum's weak, it's not bullish anymore, and so look at the price action. It gets a little bearish, right? That's one way to avoid another stop out. Okay, you could just say, hey, I'm going to take all the ones that are the same color. Okay, that's not a bad idea, right? Okay, but in the training room, you're going to see Michael take a lot of these trades. Okay, so I'm going to just telling you ahead of time that you can ask him the same question, and you know he might say, you know what, that's not necessarily a 45-degree angle, and I'm good with that, and then he'll take the trade. Okay, for me, if there's any doubt, I'll just stay out. Okay, all right. Going back to crude, crude finally broke that consolidation, right? We broke dynamic support. We're spending time underneath it. So here's a potential opportunity to get short. So let's see what happens. Okay. So we activate our trend line. We're going to see if we can get back to the green line. Do we have divergence? Well, we have a red cycle. That's good for the home team. But we don't have a lot of space in here, right? If the market pulls back to that green line, there'll be some space there. So we'll see if we can take action. Okay, so the crude looks pretty good. We might be able to get short here. Might be able to do something for realsies. Okay. Okay, so again, notice sideways action. We don't touch, we don't touch, we don't touch. Oh my God, we break support. We're spending time underneath there. That should be the alarm. Okay, game on. We can look at getting short now. So now we're looking for a shorting opportunity. So while that cooks a little bit, we're going to switch guns and see if we can't find something that's cooking right now so we can take action. All right, so I just went back to the ES. Let me look at our crude oil again. Okay, looking for it to get back to the green line, do the normal thing. Okay. I'm going to go to the currencies. Now, hold on, we might be getting this right now, so hold on. We're waiting for this. Yes, there is dynamic support here. Okay, but we did make a new pivot low, so that means we're trending. Okay, if you do get these green dots, okay, you only want to take the trades that get back to the BBC here. Okay, you want to make sure there's enough space between the BBC and the green dynamic support dots. Okay, again, if you get green support dots or dynamic resistance dots, as long as we're trending, that's okay. But you want to take those ones that are off the green line here, the BBC. Why? Because there's enough space for you to take action. There's enough room for you to take some points off the table if that ends up being the low. Okay? Because remember, we're going to move our stop down. All right, that's still monkeying around, so let it screw around there. I'm going to change. I changed on us. I went to the euro. Okay? This is a hot mess, too. We're kind of sideways here. We did make a lower low. Okay? But look at the slingshot is really sloppy, so we're not going to do anything there. This is the British pound. Zoom out, zoom out, zoom out. We're just sideways here. The Swiss franc. Okay. A few things to observe. We did get the pullback to the BBC with the down close. The color was the wrong color. Okay. A trend line was required. and a close below the trend line was required. We do get a close below the trend line. But Bert said earlier, do not take this trade because this is at a 45-degree angle. However, the market went down, and now everyone's mad at Bert because they would have made money here. But like I said, more times than not, they'll trade sideways, which we are doing now, and ultimately have a tendency to stop you out. Okay, that's one example that didn't. That's the one that gets you. If it happens the next time, you'll forget what I said because you're mad at me. You get into the trade and then it does stop you out. And then you say, I only get the ones that are losers. And that's because you got mad and you felt like you missed an opportunity here. But it's just the mental game that the market plays with you. I'm telling you, you're going to go through it. Again, if this is a different color against you and at a 45-degree angle, in my opinion, don't touch it. Okay? All right, I'm going to go back to crude oil. Okay, of course it's laboring here, but now we have that separation. The green line is pulling away from the cycle. So we got a red cycle. We got some divergence here, separation. So it'd be nice if it gets to the green line and fails. Okay, so we're on alert status. We're just waiting for it to work toward us. Going to go to the Canadian and fishing for other markets. Trading sideways. Okay. Double bottom, double top. We need to break the range. The Mexican peso, for the most part, same thing. Aussie dollar. Okay. Green support dots here, green support dots here. So a little bit of sideways action there. Okay. Nothing there. So let's try the Japanese yen. Okay, the Japanese yen. Nothing happening either. So the best thing we have going, if it cooperates, is the crude oil. Okay. All right. So let's see if it comes back to us a little bit. I'd like to get in the DOM here and show you how to execute a trade here. If it does qualify, what we're going to end up doing is going inside the red and left clicking. Okay, that's what I just did. I left clicked. Okay. We left click in the red, we're going to get short. If I left click in the green, we're going to get long. Okay. This example, because it was a bearish cross and we're looking for a shorting opportunity, we'll end up left clicking in the red. Okay. So that's the game plan. Now, the interesting thing is, now that we have a little bit of time here, is that the cool thing about DtPro is you actually can set up a bracket order, which means, we talked about this, every trade has an 8-tick stop attached to it. Okay. What you can do is you can program the DOM to automatically place a stop loss as soon as you get into the trade. So notice how I hit this tinker toy triangle, the bottom of the DOM opens and closes. If you left click on it, okay, you're going to have a few choices here. You want to check sell stop and buy stop. Okay, and if you want to make sure it's on the 8-tick stop rule, you right click over the word buy stop and put factor in ticks. Just make sure it reads 8. Same thing with sell stop. Right click over it, factor in ticks, make sure that reads 8. What this will do is, as soon as you get into the market, watch this. If I left click in the red, notice how it always puts a stop in 8 ticks right behind it. Okay? So that's one less button you have to push. In the heat of battle, when things are moving, it's going to be an advantage to you. Okay? So that's how you work that. It's called a bracket order. Okay? And you can do that for each market because the rule doesn't change. It's always an 8-tick stop. It doesn't matter what market you're trading. Okay. All right. So if it gets up here to the green line or the BBC and we get a down close, we'll get short. Okay. And our bracket order will be in place. Okay. In other words, we'll have a stop right behind it. And then I'm going to show you how to drag it. Have to have the market come back. I'm going to check on the indices. She's trying to make another run. She might. So if we start trading north, start spending some time above the tops here, then we'll try to get long. That might be enough to drag this crude up here. So let's see. Sorry, there's not a lot of markets that are trending for the moment. And that's why I can do this in slow motion. So we're waiting here. I'm just going to look across some of the other markets. Okay. Notice how I zoomed out in the gold. We have a bearish cross here. MA1 is red and a cross in the BBC. Okay. We have a lower low here. Okay. As I outlined earlier, you want to see this. Right? That's what we're seeing. So gold is an opportunity to get short. Okay. If we can get price action to come back to the BBC, the green line should pull away, and we should have that divergence we're looking for. Okay. So now the gold is in play. So again, because we have the cross here, our next order of business is activate the trend line and get ready to draw. Okay. So if we get another candle, I'm going to draw another trend line. So I'm just waiting. Crude oil. Start drawing that one. Okay. So let's see. Just kind of waiting here. All right, so not necessarily we're looking for a close. That's not a close below. Okay, looking for a close below the trend line. So if we can't get here and we close below the trend line, then we'll talk about maybe doing something. Okay, now this is where Michael would get proactive. Okay, so again, if he knows the high is going to be 13 and the low has to be 9, okay, see, and that's the close. All right, so here. I tried to get short there, but it looks like I missed it. So hold on. I was hoping to get on this just to show you. This is also a momentum trade. Okay, we know the guys that are CFRN members know I'm breaking the rules here, but I'm just trying to show you something in the DOM. Okay, we'll skip this one because, but that is, we'll look for maybe the gold here. Okay, if the gold qualifies, this looks a little cleaner. Okay, so we'll do that one instead. Okay. Sorry. Don't fall asleep. Sometimes you have to be patient and wait for these things. I'm trying to keep it by the book, okay? Show you some realistic stuff. The crude oil, like I said, let me get rid of this trend line, okay? This was not the ideal setup, so that's why I ignored it. Okay, but I want to try to. All right, so hold on. This is for realsies, okay? So here, draw the trend line. This is what your trend line should look like. Now we're getting a separation, right? So that's good. All right. So now we're going to look for an attempt of the green line. If we get a touch and then a red candle, we will get short. Okay. Is the trend line required? No. As long as the cycle is red, we're cool. We don't have to do anything. Okay. Now, again, this is where Michael becomes proactive. If the high is 1520, 720, knowing that every candle is 4 ticks in height, 1, 2, 3, 4, you're going to right click at 15, 26, 70. So you're going to add or subtract 5 from then the current high or low. And there you go. That is the close below the trend line. Okay. Do we have separation? We do. Okay, so here, it's in motion here. Point a few things out. Inside the DOM, we are short. Here's our stop loss. Top of the DOM, -1. Your P&L is moving. On the chart, you got this big fat red line saying you're short, dude. Okay? There's about 4 different places that let you know, hey, you're in this market. Okay? So we are short because it closed below the trend line. So we had the cross. We had a blue candle, we connected the dots off the lows. The cycle is red, and we got some separation. And, stand by, we were making lower, come on highlighter, lower lows. Okay, so we were trending. So all the ingredients are there. Okay? So now, if we get some cooperation, I'll show you how to trail the stop. So here's what you do. I'm going to tell you ahead of time. Here it is, right? What you're going to do is you're going to take your mouse and put it over the number 1 there and left click. Hold the mouse down. Hold that left click down and then drag, release. Drag, release. That's just how you move it. Okay? And if you're worried about whether or not that stop's working, if you do this, and I suggest everyone have this box open, go to trading, positions, order management, and working orders. There's your stop. Okay, there's the price. Now watch this. Move it down. Release. Notice how it moved. So we're plus 4 ticks in our favor. Now the stop goes to break even. What's break even? Your entry. Okay, if you want to go one step further, put it 1 tick ahead so you cover the trade and some. Okay, so now we're at break even and it just took us out. Okay, no harm, no foul. Short was actually here. We got filled. We got a pretty bad fill, but the bottom line is we took a tick out of the market. Okay, that's the bottom line. Okay, in the end, what we expect the market to do, we expect this green line ultimately to get back into the cycle. There's not a lot of space here. But the normal thing for the market to do is to make a new pivot low. Okay? And when everything comes together like it did right here, okay, that's when we take the trade off. Okay? We're out of it now. Okay, we're flat, which is fine. Okay? But that was the entry. Like I said, I think we got filled down here on a sour fill. But the point is, we were able to walk you from start to finish with that one. Okay? So that met all the criteria. So that was a nice one to kind of end the webinar with because it checked all the boxes. Okay? Again, I would have this box up over here, the working orders box. Notice it's blank. Okay, when we got out of it. So if you're ever wondering, hey, do I have any orders working? If you have this box open, this will tell you. If you have something in there, okay, that's not good. That means you have some outstanding orders that are working that you don't know about. Okay, it should be blank. At the end of the day, this box should be open. It should be blank. That would be my suggestion. Okay, so it's 2 o'clock, so we'll call it quits with just that. I'm happy that kind of fired, so it allowed us to get in there and do something and show you how to place an order and how to manage it and all that other good stuff. There's not much trending going on right now. The S&P is getting ready to break the upper end of the trading range, and if it does, then you're going to be, despite it, being up 30 points or 40 points, it's still going to possibly say go long. So there's some momentum there, so you just got to go with the momentum. You're not signing up to pick the bottoms and tops. You're in the business of getting into the middle. Okay, take a piece out of take chunks out of it. Okay, and then not that we're trending, but bullish cross, pull back to the BBC with the up close. The cycle is blue. Green line's pulling away. Again, all the active ingredients for the market to go higher. Okay? All right, that ends it. Every Thursday from 1 to 2 Chicago. I'll see you in the room in the morning. This has been recorded. I'll throw it on YouTube when I'm done so you can review what we've talked about. Again, if you're brand spanking new, this is going to be a good cheat sheet or a syllabus for you to lean on. And there's other recordings in there going back probably a few years. So I try to be consistent with it. So that's your opportunity. It's a free tool, and you can just hang out in there and check what's going on. Okay.